All right. Hey, everyone. Hold on a second. All right. How you all doing? Mark here. My name is Mark Principato, Mark P Markets, if you follow me on TradingView. And I'm a chartered market technician. Thank you for joining me for another Greenbridge Investing market analysis. For those that are new to my live stream, please share the symbol that you'd like to see me analyze in the chat now. Because what I'm going to do is I'm going to run through a couple of things here. I want to run through Bitcoin, Ethereum, Litecoin, broader stock market, and gold. Just a price forecast for the next, what to expect over the next few days, like tomorrow, Monday, Tuesday type thing. And then we'll go from there. All right, the thing is I want to make sure I answer as many questions as I possibly can. Okay, so again, thank you for joining me. So let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, hold on. That's not what I wanted you to, here we go. All right, so here's the thing. And by the way, if you're interested in Greenbridge Investing and what we do with all that stuff, you can check out, all the links are in the description portion below the video. Okay, so I don't have to spend any time talking about that. You can check it out. All right, hey everyone. Nice to see you all. Thanks again for joining me. All right, so please share your symbols in the chat, so that I can have a whole list to go through once I complete my portion of the analysis. Now, let's begin with Bitcoin. All right, Bitcoin price forecast. Right now, there's been so much like hype and nonsense going on in this space. It's beyond ridiculous. But anyway, in situations like this, because you have a very reactive crowd, that's just the way the herd is, okay? I understand, no problem. So in this type of situation, you're going to have a lot of conflicting analysis. Some people are going to say it's a long. You're going to have bears coming out saying this thing's a short. I had some people in the chat room earlier talking about Bitcoin dominance. And here's the thing. I want to just make a point about those, about all these, I'm going to call them frivolous variables, okay? Things like Bitcoin dominance, things like the PI oscillator, all those kind of things, they're frivolous because, they're valuable until they're not, right? I mean, like for example, I was watching a video about a week ago, and the guru on there was saying, oh, and the Bitcoin dominance, it's just pulling back a little bit. I wouldn't worry about it. Then what are you looking at it for, right? Or if you wouldn't worry about it, like why bother looking at it if that little pullback means nothing? Meanwhile, people now talking about, oh, Bitcoin dominance, pulling back, blah, blah, blah. Okay, so maybe it's worked before, but as you can see, for my type of analysis, I don't have to pay any attention to that information, all right? I don't have to pay any attention to news. I don't have to pay any attention to anything except for the price action, the levels, and the trend. Those are the things that tell me what is likely to happen next, not old news that someone else reported, that's basically ancient by the time you get it. Even if it's a couple of hours old, it's ancient. What I want to know is what is the probability that, of price action in the near future? Because these markets, they're not predictable, especially on the long term. Okay, all these people coming out with these ridiculous predictions, it's like a broken clock, right? It's right twice a day. So you can't really go by any of that stuff because things change. And then everyone wants to grasp at fundamentals. They don't really mean anything, okay? Not when it comes to timing. So price really gives us all the information we need. All right, so all that ranting aside, let's talk about Bitcoin. And let's talk about why I'm still bullish on this thing, even though there's no setup. So first things first, general trend is still bullish. It hasn't changed, okay? Hasn't changed. All we are is in the lower portion of the pullback. Okay, fine, no problem. The support level is 50K. That is the level that is still in play. And that is the level where I would like to see some type of bullish reversal. All right, so I'm anticipating that. I'm not predicting it. All I'm saying is if the market can deliver that scenario, then I'm prepared to go along. Or, it would prompt me to share a long signal if I see it. So what will that look like? Well, we should see a bullish pin bar develop right around here. Perhaps just a bullish candle. Never mind, it doesn't have to be a pin bar. Maybe it's an inside bar. that develops right around here, okay? The point is, that's where I want to see it develop, and then I'm willing to take a risk right there for a swing trade. So keep in mind, this is a lot different from investing. You know, a lot of people that are new to this, they come and they think a trade is a trade, but that's not true. Trades can be categorized by time. So, you know, when I'm doing these forecasts, this is from the swing trade perspective because that's the strategy that we employ when we share our signals. And by the way, our signals have been infrequent in recent times because the market has just, that's the way the market environment is. We can't force trades. I don't like to force trades, and we're not day trading. So, you know, I just have to ask, if you're following our signals or you've just joined our chat room and all that kind of stuff, just please be patient because, again, we're just being very cautious in an environment that is full of uncertainty and the reward risk just doesn't make sense a lot of the time. Keep something in mind about opportunities. Good opportunities, high quality, high probability opportunities are rare and infrequent, which means they're not very, you know, you don't see them very often. So if you have more than like a couple of swing trades per week, you're probably over trading. Because we haven't been we haven't seen more than one or two opportunities like every 2 weeks. That's what it looks like right now. All right, so my point is this. I want to see the reversal around that 50K, and right now there's nothing. So I do nothing. I wait. Okay, I don't jump in front of this. I wait. This candle earlier was green, and it gave it back. Okay, hey, fine, no problem. We're still in an attractive location. That's all that matters to me right now. Why is this attractive? Because if we turn in this 50K area, maybe even it goes slightly lower, there's plenty of potential to test the middle of the range. That's all I'm looking for. I don't need this thing to go to new highs to achieve a reasonable reward risk, okay? So that's what I want to see. Now, what if this thing breaks? Someone mentioned in the chat earlier, I think it was Romana, mentioned something about a hash thing going on. I don't know, something like that going on. And he didn't expect the market to respond well to whatever that's all about. And okay, fine. So maybe Bitcoin breaks, you know, as a result. Now, this is what you need to keep in mind. Again, you can't predict these things. You have to adjust, okay? Not react, adjust, because you're prepared in advance. Now, if Bitcoin breaks that 50K support and closes decisively weak, meaning it's closing on its lows, then you're looking at like 48K and possibly 40K. I mean, those are possible if Bitcoin proves that type of weakness. Now, that's one thing. So, hey, we don't have to step in front of that and we can avoid that. But the problem that causes for a lot of people is they're in all these altcoins that were heavily hyped back in February and early March, heavily hyped. And now you have a lot of people stuck in those coins. My question is, if Bitcoin breaks that support, where do all these altcoins go? Okay, so that's what you have to be careful of. If Bitcoin breaks, then the more conservative thing to do would be to reduce your exposure, meaning you're going to probably, if you're stuck in an altcoin, it was much higher and now it's just kind of consolidating, maybe sitting around near its lows, and Bitcoin breaks, most of those coins are probably going to go lower. So it would make sense to reduce your risk at that time, which means you're going to have to absorb some losses. But it's better than going into hope mode and watching that, you know, that $1,000 or a couple of $1,000 you invested, watching that number go to like, you know, less than 1,000. So just something to keep in mind there. So that's Bitcoin. Now, I want to talk about Ethereum because Ethereum was earlier breaking, is making new highs. Now, when something like that occurs, here, let me pull up my Ethereum chart here. When something's pushing new highs, right? All the herd of gurus and experts and all the other Bitcoin people come out of the woodwork and they all start making videos, right, which you can find on YouTube. Oh, Ethereum new highs. Ethereum's going to 5,000 by tomorrow. Don't miss it, right? You know all those nonsensical videos. I hope you can see through them. This is, I put it in the chat earlier today. I said, watch out in this zone. I said, if it's going to fake out, that's where it's likely to fake out. So far, it's faking out. Now, again, it's early. This candle can still close strong, but this is not a good sign. Especially if you bought it at the top of that move, thinking that it's going to break out. looks like a failed breakout in progress. But we don't know until we get confirmation. And confirmation would be a red candle developing right here, which takes an entire day. So just have to keep something like that in mind. Perhaps the current candle closes on its low. Maybe this candle turns red, which is not a, that's really bearish if it does something like that. It means you're caught at the top. Okay, so something to keep in mind there. Something that makes new highs like this doesn't always mean it's an event to celebrate, especially when a lot of the space is lagging, right? This thing was going vertical, and I'm looking at all the altcoins expecting, all these highs all over the place, and they were all sitting on their lows. So I'm like, all right, that's not good. All right, so anyway, just something to keep in mind there. So as far as the forecast for Ethereum, it looks like you have a failed high in progress, meaning I'd be looking for supports, okay, which is around 2,000. That's if this thing fails, that's where your next support is. And if Bitcoin breaks, then that 2,000 may break as well. So you don't want to get caught. Now, just a quick learning thing, a quick educational tip. Like I said, if you bought into this on that breakout, and now you're in hope mode because, I hope it comes back. They always come back. They always have good news. Well, now you're taking a lot of risk. So if this candle low is taken out, which is 23.17, it would probably be a good idea to take the loss. Yeah, it may be uncomfortable, it may suck, but it's better than watching this thing go to 2K or break that, because now you're at the mercy of the market at that point, and that is not a good position to be in. Okay, so again, I'm talking from a swing trade perspective. From an investment perspective, it's a different story. But then again, you shouldn't be taking full lot investments at these levels. These are unattractive levels for long-term investments, very unattractive levels. All right, you want to take those type of investments near supports or at levels where these markets are hated and the herd is banging them out, not buying them, okay? So I know it's a very contrarian mentality, and I know it's hard to understand, but that's where that's usually where the best opportunities are, okay? So all right, so that's Ethereum. Now let me jump over. I was going to talk about Litecoin anyway. I see someone asked about it. I was going to talk about this anyway. So Litecoin. Now Litecoin was a trade of the week that I sent out on yesterday by email, and it's active. So let's talk about this. Now I chose Litecoin because we looked at on the show. We looked at like a stock that Henry was talking about, and we looked at some video game stocks and stuff like that. And the thing is, I chose Litecoin for one because it was fooling around near a support. And for two, I don't like stocks. And then when we go to the stock market, you're going to know why I don't like stocks. And I've been very cautious on stocks. So I'm like, I don't want to put on another stock. These stocks are not doing, they're not in a healthy location right now. So why am I going to put something on that is likely to get stopped out when the S&P pulls back? Okay, and we're going to talk about that in a moment. But so I picked Litecoin, okay, because Litecoin was fooling around with support, and I wanted to avoid stocks. So now Litecoin, the trade idea basically came into play here. I'll pull it up here because I have it on a different chart. I have it on. Let me just pull up Litecoin. I think it's on my Bitfinex chart. Let me see. Yeah, there it is. You can see the trade idea. Okay, so the buy stop was 270. And this thing was as high as 289 earlier today. This thing's at 267 right now. So if you're in this trade and you don't like the idea that this thing can go to its stop on the next leg, then this would probably be a good time to exit the trade and take the $3 loss, because this is turning into a bearish pin bar. Okay, it's not closed yet, but we have a few hours before these things close today, right before the candle closes. If that low is taken out, which is 250, basically at 250 area, then it becomes a sell signal. So right now you can just basically take an almost break-even type of trade, small loss, and avoid the whole thing. And you know what? If it finds support in the next few days, perhaps you can get back in. You can always get back into these things. You should never fear missing out. There's nothing to miss. Okay, so as far as Litecoin goes, the attractive level is really 230. Now, I put that buy order at 270 because I saw these candles and I was like, all right, they're buying, and this thing may not retest 230, so I'd be willing to give it a try. But as soon as it does something ugly or something that it should not be doing, then you have to be nimble. And that's where, when it comes to trade of the week, I mean, we can't hold your hand on those, right? Like those are something that you have to use your discretion, and we share them just to give an idea of how our strategy generally works. But when it comes to like our active investor chat room, obviously we spend more time updating these things and giving you some more insight as the market adjusts. Okay. So anyway, so that's Litecoin. I still like these things generally long, just not right now. Okay, and another buy signal can possibly develop between here and 230. If you're willing to hold it, to give it that chance, that's the risk that only you can decide to take. Okay, so cool. So that's Litecoin. All right, so again, if you have questions, please share them in the chat for markets that you'd like to see. I see another one. I don't see lots of questions, but then again, I'm not simulcasting on TradingView today. Usually there I get so many questions I can't answer them all. All right. Anyway, so let's move along here. Let's talk about the stock market. Okay, the broader stock market. Look at this mess. The Nasdaq was green earlier today, very green. Today's high was 13,955. We are now 13,749. What is going on there? Okay, that's obviously a result. I don't even know the news, okay, because I pay zero attention to news, but obviously there's some news floating around in the market to turn the market like that, because I was watching earlier and this market was nothing but bullish. Okay, watch. I'm going to show you the 5-minute chart. Look at this. I'm going to show you earlier intraday what was going on here. And here, when we look at this thing intraday, right, back here at the open, right, the stock market open 9:30, right around here. I mean, it pulled back and then it had this bullish move, getting everyone all long. Okay, see that? This is a 5-minute chart. And then look at this mess. So obviously this right here, I don't even know what the news is in the market, but that's news. In order to get the market to move like that quickly, I mean, that's 1, 2, 3, 4, 5, about 10 5-minute candles. That's basically a little less than an hour of time that went by for this thing to move 200 points. That's crazy, right? That's a lot for 50 minutes. So that's news. Now, again, I don't know what the news is. I don't care what the news is. Here's why I don't care. We've been anticipating a short from this area. A week ago, I was being told, you should rethink that idea because everything is so optimistic. Well, I don't listen to people, just so you know. I only listen to the market. And the market told me that the probability of a reversal was very high up in here, okay? And I sent out an SQQQ. For those of you that are in the chat, you know. I sent out the SQQQ long call position there, which is to capitalize on the short side of the Qs. That takes a little bit of pain. And now look where we are. And today it didn't look so hot. And I was like, all right, well, you have to give it a chance. Here we go. Here's our chance. This is a very bearish sign, what we're seeing right here. Now, I'm not calling for a bear market. I'm just calling for a healthy retrace, a pullback, a proportional pullback, which we have not seen in a very long time. If the NASDAQ can push 13,200, okay, that support right there, then our SQQQ long call position should benefit. I mean, we should at least be able to double the premium that we paid. Now, a nice advantage to using call options or options at all is we're able to handle any type of adverse moves because the premium, I bought so much time on those calls that the premium hardly moved. Okay, it moved like a little bit. When you short like an instrument outright, like the ETF or whatever, you short a stock, you have to take a lot of pain, and it's very hard. All right, because the market, you may be wrong, and the market may go vertical on you, and then you get stuck in that thing, right? Yeah, you could put a stop, and then you get stopped out, and then it turns again, and you get back in, and you get stopped out again. The option smooths all that out, so we're able to take all that pain, and and now look, the market's turning our way again. So that's one of the reasons why I like the SQQQ or options. But now SQQQ, that instrument on its own, is a very highly speculative instrument, and time works against it dramatically. So the market needs to move relatively quickly. That's why another reason why I bought so much time on that call. I bought January calls, okay? And they were cheap because the market was so high. Anyway, my point is this. Market turned again today in an area where it was likely to turn. if I erase this blue box right here, okay, and I get rid of this little one over here just to clear it up, right, that blue rectangle, I said earlier in the chat, it's back inside that blue rectangle. And that's where probability favors bearish activity, and that's what we got. So that is all good. And also, this is the other reason why I've been very cautious and hesitant on stocks, because I don't like this location. I don't care how optimistic the experts are. I don't care how optimistic the gurus or the news or whoever. It's all meaningless information. I'm only looking at probabilities, which are something that you cannot see. Okay, that's why they're not obvious and why people don't react to them, because they can't see them. Right? As you have to understand something when it comes to timing markets, a lot of people don't even realize how they process information. Right? If you think about the physical world, we process information in a reactive way because that's how we're brought up, right? Think of a little baby. The baby gets hungry. The baby doesn't know how to say I'm hungry, so it makes a noise, right? And the loving parent hopefully comes and feeds the baby. The baby just learns something. You feel hunger, it doesn't feel good, you make a noise, you get fed. So you react to your feeling, and the environment rewards you with something, right? So the market can work in the same way, and that is what our minds are wired to do, react to things. Well, markets are highly random. So they're not a physical, this is what you see, what you get type of environment. This is why logic doesn't work. They're random. So they're not always random, but they're highly random. So you have to realize price is a derivative piece of information. We can't see how the price is derived. We can't see the actual order flow, the actual orders. Now, people can argue, oh, but you can look at the order book. Oh, I see the order book on Coinbase Pro. I could see the order flow. That's not what I'm talking about. Okay, there are limit orders, there are stop orders, and there are market orders that are, what you're seeing is the result of those orders, but you can't see the orders in the book as they change from like a broker's perspective, right? That is very valuable information. We have to guess what that is. So anyway, my point is that is what's actually changing the price, and we can't see those things. If we were able to see on something like the NASDAQ, if we were able to see a large population of sell orders sitting like in an area like this, we'd be like, oh, I'm not going to buy it there. Look at that block of sell orders. There's like $1 billion worth of sell orders right there. How's the market going to eat through that, right? But we can't see those things, and they change. So 1 minute they're there, and then they're not there. So you have to guess, and that's where probabilities come in. Anyway, so enough of that stuff. That's the NASDAQ. I like what it's doing as far as our SQQQ. Now let's see how our SQQQ is doing today. It's up at 11 and a quarter. Okay. I mean, again, this thing, the NASDAQ needs to move dramatically for this thing to start to go, and the NASDAQ hasn't even begun yet. So we have the January $14 call. I expect if this thing can push $12, $13, I expect that $14 call to double or maybe even triple in its premium, right? And that's all we're looking for. Anyway, okay, so that's that. Let's talk about gold real quick, because that's another position that we've had on. Now, gold's been very interesting. Gold has reached its first target, as you can see. I called this like a month ago, just about 3 weeks ago, at 1720, and it's been doing well, right? And it's inside the target zone. It shows these occasional red candles. I'm not worried about them. We're in a fundamental period where there's usually more demand on gold, so I'm using that as background information. If gold pulls back a bit, I'd just be looking for the higher low. Okay, so nothing to do there. Just let the position run. Now, here's what's nice about the gold. Look at like wheat and precious metals. We talked about all these a month and a half ago when they were hated. Kept telling people accumulate, and now they're starting to work. Newmont Mining. Look at that. They're ahead of gold, so they're pulling back a bit. But your positions should be green right now if you got into those. Those were not swing trades. Those were more like position trades, much longer term. I have my WPM. I'm not getting out anytime soon. I want to see gold pushing 2,000, and then I'll start selling. So that could take another couple of months or whatever. So I'm liking gold. Now here's the thing. Keep an eye on these charts. Okay, here's the US 10. This is the 10-year note. This has a lot of effect on things, right? So higher bond prices means what? It means lower yields, right? Lower interest rates. And if bond prices pull back, that means yields go higher. So right now, interest rates seem to be going lower, okay, for whatever reason. You can't look at this as a one-to-one relationship, but if the bond market pulls back dramatically, I would think that that would be a negative for the stock market, right? And the stock market's pulling back now, and this thing hasn't even turned that way yet. So just something to keep in mind, because higher interest rates are not good for anyone. So just something to keep in mind, right? Also, keep an eye on the dollar index. Now look, the dollar, again, is going to be the inverse, right? If interest rates go higher, the dollar should like that, right? If interest rates go lower, that means it's better, it's more dollars, right? It's cheaper. The cost of dollars becomes cheaper if interest rates are lower. So usually that means dollar weakness, right? More supply of dollars. All right, I'm not here to talk about economics, but here's the thing. So we have that bond situation. Meanwhile, the dollar's going higher here a little bit, right? Now, the dollar has been in a strange situation. It had this recent rally, pulled back a bit, all right? And if we look at the bigger picture on the dollar, which is really what you have to pay attention to, not the small ticks, but the bigger picture, this is still a bearish trend, although it's trying to change its tune. Okay, this little blip today doesn't mean much. Okay, this thing needs to start taking out resistance levels again, because right now it recently took out a support, which means that broader trend is likely in play, which means weaker dollar, which means inflation, right? That's what the dollar is saying right now. And maybe the market will start acting negatively to that at some point. But, you know, again, just some things to keep in mind, because weaker dollar means stronger things like gold, you know, possibly Bitcoin, and typically stock market. But it's not the only variable, and that's what you have to keep in mind. So it can put pressure, it can add pressure to things, but there are many variables. You know, one negative earnings report, and you know, you see what you see right now in the stock market, or whatever's going on there. So just want to make a few points about that. All right, how long have I been ranting for? Let's see. Oh man, almost a half hour. I wanted to rant for less time than that. All right, so let me get to your questions now. So again, if you have questions, please share them in the chat. Also, if you like the video that I'm doing, please press the like button and also register for the channel. It gives me good feedback, and it's nice to see. Okay, so I see BCH. Oh wait, no, hold on. There's a question. Andre is asking a question here, and Sean. Hey, Sean, it's good to see you. Let me see here. I see a question from Andre. How about HD for a short? Okay, hold on. Let's take a look at HD. And then we'll go back to this one. All right, so Home Depot as a short. All right, now this is obviously Home Depot is going to respond to like the general market. It's a market stock, right? I guess you can look at this as an economic gauge as well. Home Depot as a short would be a very aggressive short, because the trend is clearly bullish, okay? And this thing's been vertical. I mean, this is ridiculous. So I can understand why you'd want to short something like this. And it's not a horrible idea. It's just extremely aggressive. The reason is, while it may pull back a little bit, you know, if the market finds any type of support or whatever, you know, this type of stock that's been acting relatively strong, buyers are going to pile right into it. So you're fighting that, right? That's something you have to keep in mind. So it's not the type of short that I would take. In a situation like this, I would be looking for the long on the pullback. But the thing is, I'd be looking for this support level here, which is 285, okay? Right now, this thing's at 321. So I could see why, you know, the short may be attractive, because if this thing pulls back to 285, that's a good, what, 50 points or whatever from here. So there's a lot of potential on that short side. And you know, for the reward risk, I mean, the high here is 327, 328, so you're probably risking about 10 points, and you can easily make 10 or 15 if it pulls back, right? So I would agree as far as an aggressive short, but keep in mind, you have to keep an eye on the broader market, especially things like the S&P and the Dow. Right now, look at the S&P. Given back, it's green from earlier today as well. The S&P hasn't broken any major supports just yet, but maybe this candle will be the beginning, right? We have a minor support at 41.20. I'm bringing this up right now because this can affect Home Depot. This thing breaks, right, that 41.20, then S&P may be in the broader pullback mode, which, I mean, the S&P can easily test like this area right here, which is what? 4,048. So basically, like the 4,000 area is probably going to be a nice supportive inflection point, and that's where you're going to need this thing to go. I mean, this chart looks very similar to the Home Depot chart, doesn't it? Right? So you can use this as a guide or as a gauge, right? If you want to take a short like that. Another thing to consider for like Home Depot, if you're going to take a short, consider the options, because the options will give you at least some flexibility. I don't know, I haven't been looking at the premiums, so they're probably expensive, but you know, you want to consider at least 3 months of time, at least 3 months of time. And perhaps out of the money, let's see, this thing's at, so maybe you're looking at $300 calls, I'm sorry, puts, $300 puts. I mean, I don't know, I'm going to guess 3 months out they're going to be worth $400 or $500, maybe more. And those are, you know, deep out of the money. So you're going to need the market to make some progress there. That's one consideration. The advantage to something like that is if the market turns on you, you know, you won't, that premium 3 months or maybe 4 months out won't be as heavily affected. The delta on those options will be lower than if you buy at the money. Okay? So just something to keep in mind there. I like to, whenever I play the short side of stocks or some other instruments, I like the options because they give you that flexibility. That SQQQ that we have, if I had you know, if I was short the Qs outright or something, I probably would have been stopped out a few times because, you know, the moves are so wild, right? But with options, it makes it a lot easier to hold. So, okay, thanks for bringing that one up. It's aggressive. That's what I'll say about it. So let's talk about BCH, okay, Amin's asking about. Now, BCH, I guess finally it had its breakout move there, right? Wow, this thing went to almost 1,200. What's this over here? 1,216 was the high. This thing was garbage for so long, okay? And look, it finally broke out. So here's the thing. This coin, I mean, from a fundamental perspective, doesn't have much to offer, right? I mean, it really doesn't. What do you need this thing for? Bitcoin is still the leader. Ethereum, you know, those are the leaders. So, but as far as from a technical perspective, yeah, you have the breakout, the structure is bullish, and you have this consolidation right now. So I don't know if you're in from a much lower price, but whenever you see these vertical moves like this, it is a very good idea, no matter where it's at. If it's vertical, okay, it's always a good idea to take something off the table, maybe 10 to 20% of your position, whether it's an investment, whatever it is, it's always a good idea to capitalize on the buyers while they're there, all right? You're never gonna get the top. So you have to get that out of your mind, right? People always want precision. They want to be able to buy the exact bottom and sell at exact top. You're in a highly random financial environment, which is driven by emotions, right? There is no precision in this game. It's messy. So the best you could do is take something off the table when something is vertical, and if you want to try to get higher prices, you put limit orders up there. And if it takes you out and keeps going, hey, you're getting a higher price, right? So what? You don't get the top. But I know what happens. People are like, oh, I sold it here and it went 100 points higher. That could have been so much money. Forget what could have been, because it also could have turned the other way on you. And then you would have been like, oh, I had a chance to sell it and I didn't sell it, and now it's 300 points lower, right? So don't get into that gambling mentality. It's like it's a lot higher than where you bought it. Take something off the table. And if you're holding it as an investment for the bigger picture, then you have to be prepared for the pullbacks, because they're going to happen, especially when this party is over, okay? Because this is, in my opinion, this flavor of the week stuff, these altcoins, all this nonsense going on with the altcoins, it's flavor of the week. Just like the electric vehicle stocks, just like the cannabis stocks, they're going to go out of favor, just like everything else, right? There's cycles, and they're going to get quiet for a while. That could be a span of 6 months or longer. So you have to be able to stick all that out. And you know, going into hope mode during those periods is not fun. That's why I'd rather be flat and wait until that period comes, because then you have plenty of opportunities and you don't have to take any pain along the way. Now, some people say, oh, but what if you're wrong? What if the market keeps going higher and higher and higher without me? Well, you know what? If I'm wrong and the market keeps going higher and higher and higher, you don't lose anything, right? That's what you have to keep in mind. The market can go higher. If you're not in it, you're not losing anything. And if at some point the market will pull back, the market will provide an opportunity. All right. So anyway, my point with BCH is it's consolidating right now. in this consolidation, okay, this isn't bad. It's a higher low. But the question is, what happens if Bitcoin breaks, right? If Bitcoin breaks, I'd be looking for this 828 to be taken out, this support right here. Because, I mean, this thing's going to follow Bitcoin, right, generally. So watch that Bitcoin break. If it doesn't break and Bitcoin holds, then you probably have a buying opportunity in here. I don't judge this thing by itself because it doesn't really move by itself generally. I mean, this recent move is unusual, and maybe that has something to do with Ethereum. I don't know. Usually it follows Bitcoin, right? But Bitcoin has not made a move like this recently, and and this thing has. So maybe it's breaking away, but right now I would not judge this thing on its own. So I'd be looking for the long signal in Bitcoin and then for this thing to follow, right? So use Bitcoin as your guide. Like I said, if it breaks that 828 level, it's probably going back to the sevens, the mid sevens. That's your next support after that. Otherwise, if you do get a buy signal here, I'd be looking for another test of 1200, right? But also you have to be very careful up here. That's where it can fail, just like we saw with Ethereum. Okay, so that's what I think of that. General trend though is on your side. Just watch for the support breaks if Bitcoin can't keep its act together. All right, thanks. So thanks for asking about that, Amin. All right, Travel. It's true that BTC can break even the 50K support, but it's also true that even in the worst sell-off, there'll always be a bounce. Right, Travel. So going back to Bitcoin, right? It can break the 50K. Now I'm not calling for a bear market, right? We're just looking at a pullback, because for this thing to really get bearish, like into like a neutral mode or a range bound mode, it needs to take out 40K. Once it takes out 40K, if it can do such a thing, then I will be a lot less bullish on it for I wouldn't say for the longer term, but for the, maybe over the next 3 to 6 months, I would be expecting a range bound market if it does something like that. All right. Otherwise, I'm still short term bullish, or 3 months to 6 months out, I'm still bullish until the market proves otherwise. So thanks for mentioning that. Now, he says here, I sold 3/4 of my BTC position and will stay in just for a quarter. Haven't bought any altcoins, although I've been watching them for days now and will wait for new opportunity. Okay, smart move. Nothing wrong with that. And there's nothing wrong with holding on to some Bitcoin for the bigger picture. No, do I doubt these people that are saying Bitcoin will be at 100,000 or 1,000,000? Well, no, I don't doubt those people. It's a low float instrument, right? There's not a lot of coins available. You can't make more coins, right? There's a finite amount. So yeah, I believe that, especially if we have a dollar situation in this country where we have hyperinflation and all that, yeah, Bitcoin will be in a position to benefit from all that. But Bitcoin also has some vulnerabilities that people may not realize, like electricity, for example, right? As we learned with China the other day. So just a few things to keep in mind there. All right, so Paul's asking about XSNUSD. All right, let's take a look. Oh, and by the way, someone in our chat room, let me just do this now before I get to XSN. Someone had asked about XRP. So let's take a look at XRP real quick, because there's been a lot of, this is a heavily hyped coin and a lot of nonsense going on with this coin. So, the vertical move, great. How many people got caught in this nonsense right here? When I see that, and as all of you know who watch my streams, every time I see something vertical, what do I say? You can't touch this, right? Let it pull back, blah, 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 because usually this is what's coming next. How many times have I shown that? So here we got, same thing. I hope none of you got caught in this. Now, pulling back for a consolidation here. Okay, look, no problem. Broader trend is arguably bullish, all right? And we're pulling back for a potential higher low. Now, my question to XRP is, if Bitcoin breaks the supports, what does this do? Okay? If this thing starts breaking those supports, I want nothing to do with it. So again, from a swing trade perspective, if Bitcoin can hold its supports, then I'd be looking for a breakout out of this little minor consolidation of $1.46, right? And then I'd be looking for at least a test of the high, because the trend right now is still arguably bullish. When does that trend change? Well, when you start breaking supports, which we have not done yet. So right now, I'd be looking for another test of that, $1.88, maybe $2, but I would expect something similar from Bitcoin, okay? Or at least a leader, Ethereum. Someone has to be pushing highs. I don't expect XRP to be able to do it on its own. Okay, I mean, anything is possible, but that's what I'd be looking for in terms of technical analysis. Higher low often leads to higher high. Unless it fails somewhere along the way, it's worthwhile to take the chance. But I want to see some leadership. Okay, so that's XRP. Now XSN USD. Okay, StakeNet. Now let's take a look at the bigger picture first, right? We don't have a lot of price history here. This is what I see, range-bound market. All right, this is not a trend. We have no trend here. We have this range high right here, okay? What price is that? Like 53-cent area. We have a range low right around here, which is around 35 cents, okay? You are now pushing into the middle of the range, all right? This is an attractive, actually it's an attractive area for a long, because it's not a whole lot lower than this 42-cent low, all right, which was a support recently, and you're in that area now. So you have that going for you, but the problem is there's no reason to buy. There's no green candle, there's no reversal, all you have is a location. The problem with these locations is they can be highly random. What if you step in front of this and it just keeps going, which can happen. So that's why it's not worthwhile to step in front of it, you know, unless you're extremely aggressive and you're willing to take that pain if it goes to the next support. But that's not my style. So I would like to see some sort of stability develop here for a long, if you're interested in a long. Otherwise, your next support is around that, like I said, that, what is this, 30-cent area, low 30s. That would be your next area to be looking for a bullish reversal, right? To play the range, because again, there's no trend here. So often when you're not in a trend, you're in range, you're in a range-bound environment, the middle of the range often is usually the worst place to take a trade, okay? Because it's very random, it's 50-50. It may go higher, it may not go higher. The only thing you have going in your favor, like I said, is this previous low, which means buying may occur, but you might as well wait for confirmation. Otherwise, you're looking at those low 30s. If those low 30s are taken out, I would stay away from this thing, because that's not what it should do if it's going to maintain its range or some form of strength, okay? And if there's a broader, if there's a retracement of the entire space, meaning Bitcoin breaks its supports and everything starts pulling back and altcoins are no longer popular, then I wouldn't be surprised if this thing breaks that support. So just a few things to keep in mind. I mean, that's how you use that information. If the support breaks and you're in it, hey, at least you know where to measure your risk from. And the responsible thing to do would be to take the loss. I know no one wants to hear about losses. I don't make videos about being a millionaire tomorrow. I understand that. But being able to take small losses is a skill, and it's hard to do. You're like, oh yeah, but I could take a small loss. It's easy. But not when you take a string of them, and then emotionally you get frustrated, and you're like, screw that. I'm not going to use a stop anymore. And that's when you open up yourself to enormous risk, right? So small losses are your best losses. If you can control that, then when a win comes along, it will, you know, the win is the market paying you. It's random, right? The market pays you whatever it chooses to pay you. But the thing is, you don't control that. You let the market run when you have that opportunity. What you can control is your risk. So learn to take small losses. All right. So that's XSN. So thanks for asking about that. As far as Wyckoff accumulation, not at this level. I see nothing there, right? So I would just wait on that one. Let's see. HS. Hey, good to see you, David. Can you have a look at a few near USD, Kava USD, BZRX, KNC? Okay, let's see if I can get through those quickly. All right, first one, near, NEAR USD. Let's take a look. All right, very similar situation. All right, but now the thing is, this is coming from a broader bullish trend. Well, how much is this thing? Okay, it's $5, about $5.10. What is that? Well, $5.20. Okay, that's where it is right now. It's coming off the broader bullish trend. I like this double bottom situation within the context of a broader bullish trend. You have this current situation where the current candle took out the previous high of the previous candle of 508. So there is a buy signal in this thing right now off of a double bottom support area. So that fits the criteria of my swing trade strategy. The risk is if you take out these candle lows, which is around 4.5, maybe 4.25 area, that's what you're looking at in terms of risk. So you're risking about what, 50, maybe 70 cents, somewhere along those lines. And what is the potential reward? Well, the range high. Well, actually, what is the range middle? Let's see, because that's a high probability of being reached, around 589. So that's, let's see, if you're buying this at 518, that's about 50 cents, maybe, something like that, and you're risking. So taking money off, taking some profit in the middle doesn't really make sense right now in terms of reward risk, but slightly higher than the middle, right? Up in this area, 630s, like 625 area, that's a worthwhile area, and it's within reason because it's not even outside the range. So that's something to consider for a swing trade. I mean, it's a nice chart. That's what the chart says, okay? So at least look, you have your risk defined. You have one potential reward area, which should be greater than 1-to-1. And then from there, if it can start pushing this range high, that's where you want to reduce more and then see if it breaks out. In those type of situations, if you're long from a range low and you hold it till the range high, that is when you have the luxury of letting the market try to break out or not. And if it fakes out, hey, you're still green, right? You don't care. You're in from a good price. The people that are at the mercy of the market are the people that buy up here, because now they have to hope that the breakout follows through. And if it doesn't, then they have to avoid getting into hope mode, okay? And basically take that small loss. It's a lot harder. There's no luxury there. So let's say Cava, C-A-V-A. All right, so similar situation, except you don't have the candles going your way here. Broader trend is bullish. Broader trend is bullish. You have this pin bar, right? This bullish, is that a bullish pin bar? Let me make this bigger. No, that's actually not a pin bar. That is this is a doji type candle there, right? So that doesn't really help us out at all. You have an inside bar developing today. So you have this potential double bottom range low area, and it's even recent couple of candle lows are finding some buying activity there. But the thing is, I would wait for a high to get taken out. What is this previous candle high right here? 564. So right now this thing's at 487. So you're looking at a 564 as a potential buy signal, and your risk is defined by this low, 427. So again, that's over $1. It's probably like $1.30 of risk if you get in at that buy price. So you need to make at least $1.30, right? Or $1.50. Let's round it to like $1.50. Can you do that from this price here? Let's see, what was that price again? This high is 564. So that means you're going to have to get out around 680-ish. That's around here in that area. All right, so it's within reason, right, to at least get 1-to-1. Anything less than 1-to-1, don't even bother, right? But it's within reason. Now, if that 1-to-1 ratio was like up here, I'd say forget it, not worth it, because it would take too much effort for this thing to get up there for the risk that you have to take. So not a bad idea. It's just you need a better setup at the moment, okay? But good location, good trend. Wait for the setup. All right, let me see what else you had there. Real quick, BZRX. Oh wait, BZRX. I forgot the USD part. Okay, here we go. All right, so it looks like a lot of these coins are in a similar pattern. Okay, so when I see that similar patterns, you don't want to take them all. Okay, take one or two, because you're taking the same trade. It's all the same trade. Now, here's the situation. So the broader trend is agreeable. It's bullish. Now this thing's a lot cheaper. It's 72 cents. You have a support area right here that it's been struggling to hold, right? The high of this candle right here is 77 cents, right over here. And you have a red candle in play right now. So while the location is attractive, just like the other one we looked at, the candle is not cooperating. So I would wait in this situation for another green candle to develop, close, and then let the high get taken out. Or the high of this current candle, right after it's closed, 80 cents, that's where your buy signal would show up. You could measure your risk from this low around here. You know, your stop would go slightly lower than that. That's around, what, 60 cents? 68, wait, I can't even read it. Yes, around there. Around 60 cents. So you figure your stop would be around 50 cents, maybe 55 cents, and you have to, whatever that risk is, you need to meet that at 1-to-1. I don't know if that would be as reasonable in something like this, based on buying it, if you're buying it closer to the middle of that range. So it would definitely be better if you can get that buy signal somewhere near that lower area. All right, that would be more ideal. But anyway, like I said, if all these coins have the same pattern, then it's not a good idea to buy them all. All right, KNC, USD, right? Same thing. So they're just we're just looking at basically mirror images of each other here. Again, bearish pin bar, right? See this bearish pin bar? That's not good. When you get into something after a long signal and your next candle turns into a bearish pin bar, even though the candle is green, the long tail is bearish, right? It's not what you want to see. And then it takes out the low, 289 low has been taken out. This thing's at 288. It just took it out. That's a sell signal. So that cancels the recent buy, and you have to be able to make those adjustments as a swing trader. You have to be able to take those losses, because otherwise you expose yourself. What if this thing breaks, right? Seriously breaks, and then this thing goes here. You need to be able to avoid that type of risk, right? That's why it's so important to define your risk and then take the action when it comes, right? If you buy into something and it gives you a sell signal and you're not at your stop yet, like, hey, you know what? I can reduce my risk even further than the stop loss order that I had put in. So I'm going to get out and take a smaller loss. That's actually a win. I know it's hard to believe, but it's actually a win, because now you took something that had a larger risk and you reduced it. All right, because for example, if you're making 2-to-1 or 3-to-1 typically on your trades, and you're losing less than 1, then that's a positive expectancy that really pushes it over to the positive side. So anyway, that's what I would do with this. I wouldn't touch this now. I would wait for stability to develop around this current level. Not a bad level, just price action is not with you. Like I said, with all those coins that you just gave me, I would only take like 1 or 2, being conservative, because it's all the same trade. Hey pal, good to see you. Still watching oil stocks though. I like the location and price action, SFIX and CHPT. Let's take a look. SFIX. All right, so are these oil stocks? Oh no, Stitch Fix. Okay, let's take a look here. So now here's a nice example, right? The trend was bullish, right? All that structure going back to like November, and then it gave this pullback, right? And corrected that trend. Now, people would argue, I know some people would argue that this recent price action is a bearish trend, but it's not really a bearish trend. The momentum is bearish, all right? It's just correcting the broader bullish move. That's not exactly bearish as far as trend goes, right? Because the trend persists. This is just pulling back and correcting something that may persist, which is bullish, right? The follow through from this move. So at this situation, you now have a double bottom developing, right? A failed low situation off of something that's generally, bigger picture, bullish. So I like that. This thing closed at 43.82, and you have the failed low. So here's the thing with something like this. I don't know if this is an energy stock. I don't know what it is that they do. But one thing you have to consider, I like the location. You have a setup, right? It took out the previous high here. What time is it? These things close here in a few minutes. So 44.05 was the previous high, so that you can argue that there's a buy signal in this thing right now. But the risk that you face is not just the stock, it's the market, right? And the market doesn't look good right now. I mean, look at this. Look at how's the S&P closing? Minus 28 points, 41.36. So it's not pushing its lows, but it's right off its low. But that's that kind of reversal that we've seen today. Not a good sign generally. So that can have an effect on your SFIX. A lot of stocks are sitting at supports like this, and the market has not pulled back. The market has been pushing ridiculous highs while these stocks are sitting on supports. So why that's a red flag is, what are these stocks going to do if the NASDAQ and the S&P produce a healthy pullback? Okay, forget about a bear market. We're just talking about a proportional pullback, which, like I said, could be 13,200 on the NASDAQ. Where is this thing going to go? Will it be able to weather all of that selling pressure? it's sitting at support now, right? So it's likely to break. That's relative weakness. So that's something you have to keep in mind. So you have the setup, you have the location, just don't lose sight of that bigger picture. If you want to give this a try, if it turns on you right away, you should probably get out, okay? And not give this much of a chance to go against you too far because of that potential relative weakness. A more conservative way to deal with something like this is wait for it to break this high right here, which is around 53.20, right? So that's 10 points higher. I know that's kind of a lot, but if it could take that out, that's proving that the bearish structure that's been in place for a little while is changing at that point. At this point, it hasn't proven it yet. It just could be a potential starting point, all right? So something like this, if you're aggressive, and I know Powell likes to take a lot of these aggressive trades, and there's nothing wrong with that. You just have to be quick about adjusting if the market doesn't go your way, okay? And I'm talking about the broader market, if this thing responds to that. Let's take a look at CHPT, okay? Charge point. Let's take a look at this. I'm guessing they do something like Blink charging, I'm guessing. I don't know, just by their name. So, broader trend, generally bullish. This thing pulled back. Looks like it pulled back with the whole, the EV space. Beautiful double bottom. I like that, right? Double bottom situation. And you have, actually it's a triple bottom. You have that right there. And you're coming off of that, right? So this is a great location. Very nice location. The low here is 2132. That's where you're defining your risk from. So you figure the stop is going to go around 21. You have to give it a little room. This thing is at 2204 right now, right? Close at 2204 and give you a red candle close there. So something like this, you want to keep an eye on. Like, there's no reason to rush into this. Maybe it pulls back a bit tomorrow, and maybe it gives you an opportunity to buy into that if it can close with some kind of bullish configuration. But the thing with this is these things are fooling around supports in the face of what was a very, very strong market. Do they break supports if the market actually pulls back? So same type of risk scenario where you have to look at that broader market risk if you want to give this thing a chance. Your reward risk, as far as this chart alone in isolation, your reward risk is attractive here. I mean, even if you bought this thing right now at 2204, okay, and your low here is what, 1906, so you're looking at $20. You're looking at about $2 worth of risk. Can you make $2 on the way if this thing pushes higher? Your recent high is 32.48, right? So it's within reason. Even if you can get out somewhere near the middle of the range, you're doing better than 1-to-1 reward risk at that point. So that is within reason. It's proportionally reasonable. It's just keep an eye on that. The broader stock market is one of the things you're dealing with. Now, to give you a sense of contrast, if you were looking at an S&P and a NASDAQ that were sitting at a support just like this thing was, and they were starting to turn, and this is starting to turn, I'd be like, yeah, no question, be all over it, because the market, the broader market is behind you on it, right? So if the broader market has a nice push, at least you're in a buying environment, right? Even if the stock doesn't respond to that, at least you have that behind you. It can only help. So that's the thing to keep an eye on. All right, so thanks for asking about that. Let me see here. Okay, so Stel. Hey, Stel. Oh, wait, no, hold on. I'm just going back on the chat here. I know I'm a little bit behind. Pow. Both have low correlation to the Qs, he says. All right, but and that's cool. But just keep in mind, though, even those low correlation stocks, I mean, maybe I'm just very conservative, but if the market has a decent pullback, because we have not seen a pullback in the market, right? I suspect that a lot of these stocks are going to feel it. Just like the cannabis stocks, right? When we had that pullback back in March of 2020, and we had that massive sell-off, I mean, everything felt it, everything. So even the not so correlated stocks felt that pain. So just something to keep in mind. All right, Stel, Cake BUSD. A few days ago, it was more transaction than the whole ETH network. Okay, interesting. Cake, is that one of those NFT stock coins? Let's see. Look at this thing. So here's Cake. and that's a nice looking chart. This looks like Binance coin. Look at least at one. How's BNB doing? Let me see something here real quick. Oh, all right. Well, BNB's pulling back, but all right. Nice trend. Okay, clearly nice trend, doing its own thing. Tested this high here, right? So this is what you have to watch for. 28.23 was that previous high. It took out that high. I'm sure lured in a bunch of longs and got a lot of hype, a lot of hypesters coming out. And now look what it does. It produces a red candle after that. That's most likely a failed breakout. So if you bought into that breakout and it does this to you, the right thing to do. Now it doesn't always work out nicely, but the right thing to do is take the loss. Because yeah, it may fake out at times and go higher. Why did I listen to that dumb guy? I could have made more money or whatever. I took a loss instead. But more times than not, when this thing turns red, it's such a fake out, you are now basically stuck with everyone else who bought it here and it pulls back. So, I'd rather take a small loss and then get faked out and then miss whatever than get caught in hope mode and be at the mercy of the market and watch this thing get, pull back 50%, which is very possible. Now, so in this situation, I like the trend. I don't like this location at all. Wouldn't go near this. What I would like to see for a long is a test of 21. Okay. Now, let me give you an example. A test of 21. All these people that bought up here that are in hope mode, if it breaks 21, they're all going to bang it out because naturally that's what they do. And that's where your buying opportunity could develop. A very high probability buying opportunity. Those fake outs, those support break fake outs or failed lows, as I like to call them, are very high probability reversal points, right? So that area like that could be 20, it could be 18, it could be 17. In that area, if a buy signal develops, that's a great spot to be buying, okay, for a swing trade, because that's where a lot of people are banging them out, and you can get great prices. Meanwhile, the smart money is often buying at such a location because someone's got to be taking the other side of those trades, right? So that's what I'd wait for in something like this. There's a lot of support there. Look at this. You have this previous resistance back here, and then dating all the way back to, what is this, February here? Early February, high of 21.45. A lot of support in that area right here. Okay, so that's what I'd be looking for, not up here. People buy these things, they chase them up here because this is when things look good, right? But this over here is when things look bad, but that's actually when the opportunity is there, not up here, okay? Now, one very tough thing to deal with when it comes to timing is the market will randomly reward you for taking these breakouts, right? It's like going to a casino and playing a slot machine. Sometimes the machine pays you. And that's what reinforces these bad habits that really can be, they're just usually more costly over time. And that's all that matters, right? It's like playing poker and there are certain strategies in poker that will work more times than not, right? Like, so if you start out with two aces, for example, that's the strongest starting hand you can have. Of course, it could change along the way, but the thing is, there are certain things you should do when you have two aces, right? And over time, that type of strategy should win over time. Not, that one time though, your aces, you may lose on those aces because the board doesn't cooperate with you or whatever. My point is, it's what occurs over time, not one isolated occurrence, okay? So thanks for bringing that one up, Cake. Ruben, ZIL, I took a quarter off the table with a nice profit, and I'm wondering if I should take more off the table. All right, let's take a look. ZIL, okay, hold on. Let me pull that up here. ZIL USD. All right, so nice example, and here's a nice example of a failed breakout. So hopefully you took some out. Hopefully you locked in some of that profit while it was going for those highs. I mean, if you took your profit in that area, you should be feeling very good about yourself right now. Now, so you're wondering if you should take more off the table. Well, here's the thing. You're at a support right now. Okay, the general trend is still bullish. Unless, now I suspect that if Bitcoin breaks and Ethereum fakes out and all that stuff, I'm suspecting that these things will start breaking their supports, even though many of them are at support levels right now. So you have this support level right here. This is at 17 cents. If you've locked in some profit, then, I mean, the reasonable thing to do would be to give it a chance to find support and make one more attempt at the high, right? That would be the right thing to do. The risk you take, of course, is it breaks the support. So, you know, only you could decide, are you willing to hold that support break? How are you going to feel if this thing starts pushing 14 cents? Are you going to be like, I should have taken more off the table? If you're going to feel that type of regret, then you should probably take something a little off, but just keep in mind, you're taking it off at a support, all right, not at a resistance. So there is some risk involved that could break the support, but if there's a bounce or a bounce attempt, the best place to take some more off would be this area right here, which is around, what, 22 cents, 21 cents, that area, because it can attempt at that high, you know, make a high attempt right there, and then fail, just like it occurred over here, right, back here. So that would be ideal. If it could do something like that, that would be the ideal spot to reduce your risk further, okay? And then see if it goes for the new high. Now, use Bitcoin as your guide. Use Ethereum as your guide. If Bitcoin turns and starts, you know, turning green, I'd be looking for this, you know, attempt, right? This attempt at the high scenario. And you lock some in. If it fails again, then you should probably reduce your exposure even more. All right, so I hope that helps. You know, again, this support area right here, just keep in mind, banging out more here, you're banging out into an area where there are likely buyers, right? So why banging out to them? So just a few things to consider there, okay? So thanks for asking that question about ZIL, which is Ziliqua. I don't know, I can't even pronounce half these coin names. All right, David, hey, as well as one BEL USD. Oh man, you got a whole list here. All right, but let's take a look. I got some time. Oh wow, I don't have some time. I have to wrap this up soon. Okay, so all right, let's get through these. So let's see, BEL. Yeah, I talk a lot. BEL USD. So I'm noticing, right, a lot of these coins are looking very similar, right? They've all had their pullbacks, and they're going into their first support areas, right? All pullbacks off of a bullish trend. Now, again, David, I don't know where you're long from. Hopefully, you're not long from the high. These things are pulling back. How much is this thing? $4.14. Okay. So you have this thing. It's attempting to turn at a potential support level, right? This is a buy signal. Here, your lows are right there. It took out the previous candle high, which is 4.25. It took it out. It looks similar to that Ethereum situation. And so you have a buy signal in play. The risk is defined by these lows, which is what, 344? So around, I'd give that a little more room, probably around 3.25, maybe even 3 even, right, to avoid some of that noise. One thing that I don't like about these less expensive coins is they can be extremely noisy, right? And they can tap you out right at your stop and then turn around, just like this tail right here, right? You see that a lot in these cheaper ones. So I'm not a big fan of that. But my point is, there is a buy signal here. That's the risk that you take. The question is, can this justify your risk? What is the high? The high on this thing is 586, right? And this thing's at 414 right now. So you're looking at maybe about $1.50, and that's for it reaching its high. And you have to risk, what is this? 344, and this thing's at 414. So you're looking at maybe 75 cents to $1 of risk to go for. So it's almost 2 to 1. But that's assuming it goes for the high, right? Which is a little bit unreasonable sometimes. It's more reasonable to assume it's going to go for the middle, right? There's a better chance you can get out near the middle, and your reward risk is probably not going to be as attractive here. So that's just something to keep in mind there. You're better off in these situations. You're better off waiting for a setup, developing nearer the low if it can deliver something like that, if you're interested in a swing trade. All right, that's how I would look at something like that. And if I'm wrong, okay, and let's say I'm wrong. Let's say I tell you, you know what, avoid this thing until it retests that low, right? And then wait for the signal there. And this thing goes, and it goes all the way to the high, and I'm wrong. And you never took a position. Well, you don't lose anything. Yeah, you missed a move, but there are always more moves, right? That's the thing you have to keep in mind. I know it's frustrating, but you can't let these emotional things like missing moves, because that's just a function of greed. That's all it is. You know, I'm not saying you're a person that's full of greed, but it's just human nature. we feel we get those feelings of regret and doubt and cognitive dissonance, they call it, in those situations, because then it inflates our fear of missing out, because we don't want to miss that move again. So the next time it comes around, you get more aggressive, and the next time it doesn't work, right? And now you lose. So, that often leads to a lot of confusion. So don't get wrapped up in those. And I'm not saying you, I'm just saying in general, don't get wrapped up in those, in that emotional tug of war, that emotional conflict. If you miss a move, you miss a move. Okay. You're better off waiting for high probability setups. That's just the better thing to do. All right. So let me get through this here. What else do we got? So I went over that one, which was BEL. Okay. Let me see here. Hey, Wedge, newbie. Hey, what is QQQ? So, hold on. Actually, I don't think I answered all of them, David. Hold on. So, Tomo and BLZ. Let me take a look real quick. I want to try to answer all these questions. And then, Wedge, I'll get to your question. Tomo, Tomo, USD. Similar situation, right? Similar. I'm noticing these all over the place. How many coins have we looked at so far that look like this? Bullish trend, okay? Support area. And it's trying to turn here. So these aren't bad prices. At least you're not buying the high. You have a green candle developing right now. This thing is at $2.34. Okay, it tried to take out the previous high. It's struggling a bit. Okay, no problem. In these situations, you can't step in front of these. Okay, because again, if Bitcoin breaks, you're looking at a break in all of these. You don't want to get caught when something is obvious like this, and they all look the same. That means everyone's thinking the same thing. They're all going, it's a pullback. Let's all jump into the pullback. Okay, great. And then it fails because there was no real buyers there to begin with, right? So that's just something to keep in mind. If Bitcoin fails or Ethereum fails, I wouldn't be surprised to see those support breaks, because everything seems to be at support. But at the same time, again, looking at it from a technical perspective and not having any opinions, this thing is at a level and it is trying to give a buy signal. So what you have to look at is the risk, right? And the risk here is $1.95. It's based on this low over here. And if price goes below that, then, if you're in it, really, you should take the loss, okay? If it can hold, then you're looking at a test of this area right here. That would be a reasonable area to start taking profits for a swing trade. You don't want to be overly optimistic and say, oh, it's going over here. It's strong, higher highs. It might, but the chances are lower, okay? Especially if Bitcoin and all those are having a hard time, pushing new highs and all that. Just something to keep in mind. So not bad location. Just really keep an eye on that risk and be prepared, okay? That's all I'm saying. Be prepared to make adjustments. BLZ, okay? Same situation, except these candles are not as cooperative. So let's take a look, right? You're inside of this consolidation area right here. You're right in the middle of it. So that is a support. You have a consolidation above you. So that's going to be a resistance area, right? One area where you could measure some potential from, right? That area right there. And you're in the support area. It gave you a bullish pin bar, right, the other day, followed by this red candle. This looks very similar to what's going on with Bitcoin. So again, great location, no setup, right? Wait for a setup, wait for something green, like another bullish pin bar. Now, let's say for example, this is what it looked like right now. Okay, bullish pin bar closed. You're like, oh yeah, support level, general trend bullish. That's a buy signal, right? So then you buy it, it breaks that pin bar high at 39.64, breaks the high and you buy it, and then it does this to you, okay? When you see something like that, it's like, okay, this is why you have to respect your stop. Something that has bullish momentum, because it started out the right way, but then it turned. Something that has bullish momentum doesn't do this, okay? It should follow through. You should see another green candle, and it should close strong, not this. This doesn't mean that the trade is no good. It just means that, you have to keep an eye on it. Perhaps take the small loss, because if this thing doesn't turn, it's going to break the support. Okay, so that's why it's so important to respect risk and to be nimble in these situations, because here you could reduce your risk. You can get out early, and if it turns green again, you try it again if it's in the same area. Okay, That's how I would work with something like that. Again, I'm speaking from the swing trade perspective. This is not to be confused with investing, because investing is a completely, I shouldn't say completely different game, but you have to have a different mindset about certain things, and you have to manage risk in a different way. All right, so that's BLZ. I hope you found that helpful. Let me see what else we got here. Oh, so we had that question from Wedge. So QQQ is the NASDAQ, the Invesco QQQ Trust. It's basically the NASDAQ, right? The NASDAQ 100 ETF. That's what it is. So the Qs are a gauge of the broader market, just like the S&P is a gauge of the broader market. This is particular to like the heavyweights in the NASDAQ, like the FANG stocks and stuff like that. So you can use this as a gauge for your stocks to help you time with your stocks in terms of relative strength, or you can even trade these things outright if you want to, okay? Anyway, so that's the Qs. So good question. Travel. I wasn't questioning your view, but rather trying to give myself a move. Oh, okay, no problem. No, and it's okay. You know, look, we're here to even if you were questioning my view, you should question my view. You know, there's no problem. I'm not always right about things. You know, I'm just going by what the market tells me, and sometimes the market changes its mind, right? And the only thing I can do is adjust, right? I can't sit there and think I'm going to outsmart the market. I know better than that now. Okay, so looking for confirmation. Okay, no problem. BHM. Hey, what do you think about Yuan Chain USD? Let's see, what is the symbol for Yuan Chain? Let's see, Yuan. Okay, Yuan USDT. Let's take a look. All right, so just like those other coins, wow, I see some. I definitely see a pattern here. All right, a lot of these coins are off their highs. I guess you know, and the learning. The lesson to take away from this is don't buy the highs. Okay, someone was making fun of me the other day. Not making fun of me, but someone was saying one of my quotes that I should put on a t-shirt is, I don't buy highs. Well, this is why. Look at this. If you bought the high because everyone was telling you to buy the high, all your favorite gurus on YouTube were telling you to buy the high, now you open up yourself to this possibility. This is why you don't buy highs. Okay? Hopefully you're not in from that high. Now, attractive location, broader trend bullish, that hasn't changed yet. You're sitting at support. So I would wait for some stability here, just like all those other coins. It's the same story, but you need leadership, right? You need Bitcoin, something, Ethereum. They're going to have to lead the way. What my concern is, you know, these things may generate buy signals, but if Bitcoin fails, right, after a buy signal is generated, I suspect many of these will break their supports, and people aren't going to know how to deal with that. So, you know, the way to deal with it, take your loss. If the support breaks, you can always get back in, okay? So I like the location. What's the price? $1.62. You have an inside bar developing, so your buy signal would be a break of 172. That's the high of the current candle. Once it's closed, that would be your buy signal, and your risk can be defined by that $1.60. Give it a little room. I'd say $1.50 area. And then, you know, you can measure your reward from this area here. You need to be doing at least better than 1-to-1, okay, for it to be worthwhile. Like if you buy this thing and the candle, you missed like the entry, and now this thing is running and you buy it here, your reward risk is going to be lousy, right? That's why it's not worth chasing. Because what if you get faked out and it turns? Now you got something that wasn't worthwhile to begin with, right? So, okay, thanks for bringing that one up. Let's see what else we got. Bruno, can you look at EOS? All right, then we got Shopify. Man, now I got all the questions. All right, so I'll do this for a few more minutes, and then I'll wrap this up. I apologize if I don't get to your question, but I'm going to try to get through as many as I can here. EOS. I know I'm slow at some of these things because I give you these really long answers. Same situation. All right, so off the highs. Look at these steep pullbacks, right? These are pretty steep, which means a lot of people are caught, is what that means. So yes, this could be a buying opportunity. Your support on this thing is right around here, 556. So around that 550 area, it's got a little more room. This thing right now is at 627. So it's got some room to fool around, and you don't have any supportive candles at the moment. So I would not touch this thing right now, although I like the location. I would wait for a clear, like a distinct reversal, like a bullish pin bar, an inside bar. Something green needs to develop between where it is right now and that line that I put on the chart here, okay? which is what again is 560 area. So that's where I'd be looking for the buying opportunity. Again, I'd be expecting leadership out of something like Bitcoin. I mean, look at Bitcoin. Are we surprised that a lot of these coins are sitting at their supports? Bitcoin right now is fooling around 52,329, okay? And like I said, 50K needs to hold. If 50K breaks, all these coins that we just looked at that are sitting at their supports, I suspect their supports are going to break too. Just something to keep in mind, okay? Now, if 50K holds and you get a reversal, then I would expect at least a similar activity around those coins. Another tip I'd like to give everyone, don't buy all of them. We just looked at about 10 different charts that look the same. Don't buy all of them. It's all the same trade. So, you know, you want to maybe buy one or two or something like that, or it's the same, you're just buying a mini version of Bitcoin. It's the same thing. So you don't want to get overexposed. Many of these coins, not all of them, but many of them follow Bitcoin. They don't do their own thing. Some of them are doing their own thing, but they're unusual, okay? So I wouldn't sit there and hope for the best on those. All right, so thanks for asking. Shopify, that's one I haven't looked at in a while. So Shopify is going to be affected by the market. Look at that lousy close, right? That's a week minus 48 points. Well, it's $1,000 stock, so you know that's not really a lot for a $1,000 stock. You have a broad head and shoulders. Do you see it? You have a shoulder over here. Oh, hold on. You have a shoulder over here, right? You have another shoulder over here, lower high. Not good if you're long from there. And here you are now working your way toward this support. Is that the $1,000 area? Yeah, around the $1,000 support. So something like Shopify, first of all, you know, it's going to be sensitive to the market, right? Sensitive to the NASDAQ. The NASDAQ has a long way to go before it finds support at 13,200. So I wouldn't go near this thing right now. Wouldn't go near it. This is not a buying opportunity. For one, it needs to be at around 1,000, first of all. Second of all, it needs to hold 1,000 and produce some kind of buy signal in that area, and I would be expecting something similar from the NASDAQ. If the NASDAQ breaks, and today was definitely not a good sign of strength after that reversal, I suspect that these things are going to break their supports. So I would stay away from longs. And some people may ask, well, if you don't want to go long, then how about a short? Well, the market is not, you shouldn't think of it in a binary way like that, like long or short, because this thing is, this thing may find, these things are random, so this thing may find some buyers somewhere in there, and now you short this thing thinking it's going to go to support, and then it gets all noisy and fakes you out and blah, blah, blah. So it's better off to just keep it simple. Wait for support, wait for a buy signal. Don't try to play both sides of these things a lot of times, okay? Unless, if you're looking for a short, you don't look for it now, all right? Because the move is in play. You look for it at the resistance area, not now, because this is where you run into all that risk of buying activity stepping in that you can't see, okay? So anyway, thanks for bringing up Shopify. All right, Andre, got myself a couple of $15 calls for August 20 for DM. What is that? DM? Let me see. Is this the right stock? Desktop Metal? And you bought some August calls? Well, I'll tell you, that's a good amount of time. Let's see, do I have the right price here? Yeah, that's the right price. Okay. So August, that's definitely a good amount of time, okay, for your calls. This looks similar to Nikola today. NKLA had a similar pop off of a similar pattern. Now, this is interesting. These things, you know, they're coming off these lows. I would have liked to see something like this, because that's a failed low right there. I would have liked to have seen something like this with the NASDAQ doing something similar, okay? So here's the thing with this. Now look, it's not a bad idea. You know, you're buying near a low, you're buying off this initial push, and with something like this, I would expect at least a test of this area here, which is what, around the $20 area, right? That's within reason, and you bought the $15 calls. So there's plenty of potential there. The thing is, what if you're fighting the broader market the entire time? That's the concern that you should have with this. Now, since you have options, you'll be able to ride out some of that, because, you know, options give you that type of flexibility rather than buying the stock outright. So I don't disagree with the idea, not a bad idea. It was just keep an eye on that broader market. Okay. Okay. Hey, Michelle, good to see you. I haven't seen you in a long time. How's everything? Michelle, 1 USDT. I have to answer Michelle. She used to come to all these all the time. Okay, let's take a look. So 1 USDT. All right. So this is very similar to those other situations, right? Bullish trend generally. Look, this thing is trying to find a support. Look at this long tail over here. This was at 13 cents. Is that low? No, it's around 12 cents. This low over here. I can't even read it. Yeah, it's around 12 cents. And you can see it put in that pin bar, and now recently it's trying to find some stability there. So that is a failed low. It's trying to deliver a failed low. So not a bad candidate for a swing trade. You have this bullish pin bar that developed a few days ago. The high of that has not been taken out at 12.49, basically 12 and a half cents. And now you have these red candles, these inside bars developing, which is a lack of follow through. Okay, like we're seeing with Bitcoin. So in this situation, I wouldn't take this right now. If you're in it, I would watch for this break of that 10.5 cent area low. That's a good place to define your risk from if you're in it. If you're not in it, I would wait for more stability to develop. And since this looks very similar to Bitcoin, I would also look for some leadership from Bitcoin. Okay, meaning I'd want to see some buying activity develop around that 50K level. This might be a good candidate for a swing trade as well. You have plenty of potential if this thing starts to go again, because your next resistance is there, around 16 cents, right? So you're risking what, like about 2 or 3 cents? Is that right? Let me see. To make about 4, right? So you're risking maybe about 2.5 to going for 4. 4 is within reason, right? You're not even looking for new highs. So that does make sense. Okay, in that scenario. Just, I wouldn't touch this thing just yet. Thank you for bringing that one up, and nice to see you. Okay, let me see what else we got here. So, Pow, oil comment was completely separate. Oh, okay. Although I'm open to hearing about oil stocks that won't get hammered if S&P pulls back. Well, all right, so Pow brings up oil. Let's take a look at oil first, right? We're going to talk about oil stocks. Oil is right fooling around the middle of the range here. It's consolidating. I can't really make much of a judgment for oil except that it's generally strong, right? There's no question it's generally strong. It's in this range, okay? And you're in the middle of the range. So it's a 50-50 area. I wouldn't touch oil right now. I would be most interested in oil around this area here, right? Which is around the high 50s, maybe 57, 56, something like that. That would be a good spot. Now, again, I could be wrong. This thing may find support here and start pushing those highs, but I'm not willing to take the risk on something like that. So as far as oil stocks go, I mean, look at VLO, right? Valero, nice double bottom situation developing within a broader bullish trend. So these aren't bad if oil can, hold there, because these obviously will benefit from a stronger oil, but they're going to feel some stock market pressure. So you have those conflicting variables, just something to keep in mind with that. All right, but generally nice setup, and oil is not exactly bearish. Yeah, I don't see any bearish setup or anything clearly bearish on oil. So that's looks like signs of strength. So that's what I say about that. Thanks for asking, Ian. Could you give me your thoughts on trading coins via their BTC pairs? Okay, that's a good question. So here's what I'm gonna do. I'm gonna answer a couple more questions, and I got to wrap this up because I'm talking too long. So Ian asks that question about trading BTC pairs as opposed to USD pairs, especially in alt season. Well, here's the thing about, I don't like BTC pairs. All right, let me just do a comparison, and I'll tell you why. So XLM USD, okay, this is stellar lumens against the dollar, and then XLM, can I get an X? XLM BTC. Here's stellar lumens against Bitcoin. Now, I mean, it looks a little less dramatic, but the thing is, what I don't like about these Bitcoin pairs is they're much more random, and they're going to be harder to deal with because Bitcoin is not stable, right? So while this may look a little more stable and say, oh yeah, but that doesn't look too bad compared to USD, USD is stable. So USD doesn't really move that much, and it's all XLM here. Whereas when you're dealing with XLM Bitcoin, Bitcoin has crazy moves, XLM has crazy moves, and then you get a very erratic chart. So that's why I don't like the levels aren't as reliable. I don't like that. I'd rather work with something, and this goes for all altcoins, whether it's USDT, USD, or something stable. I prefer something stable because the levels and everything else are much more reliable because one half of the equation is stable. It doesn't really change much, where, Bitcoin can be all over the place, right? So it really makes things noisy and more random. So that's my reasoning for that. So thank you for asking. Sometimes we have no choice, right? And we get into something against BTC, but it's a real pain. And I'd rather use the dollar chart to make the judgments. All right, that's why I don't even bother with BTC charts, things against BTC. All right, I'm trying to understand which is best and why. Okay, so I hope I answered the question there. Pow, tax hike priced in. Goes back to efficient market hypothesis. What do you believe? That's an interesting question. All right, so tax hike priced in. Well, here's the thing. They're coming up with that now, Pow? Is that the reason for today's pullback? They're coming up with that now? Tax hike priced in? I don't know. I mean, as far as efficient markets, the efficient market hypothesis says that markets are always random, okay? And that markets, basically under that hypothesis, the assumption is markets don't trend. They've made adjustments to that hypothesis because the original one is basically markets don't trend. And we know that that's false. Markets trend. So while markets are highly random, markets are not fully, they're not 100% random. So there's something called price as a discounting mechanism, which means all the known information in the world is baked into price now. That's where that tax hike idea may come into place, where now whoever's coming up with this tax hike, blah, 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 the market is now recognizing it, something it didn't recognize before, and is now pricing it in. Maybe it was there all along, whatever. The point is that information is being baked in and we're seeing a bearish response. Okay, whatever. I don't get confused by that stuff. Just realize that markets are highly random. Here's the things that you need to come away with, right, before you get confused with all the academic stuff. Markets are highly random, but they're not fully random, which means you can isolate opportunities that are less random, right? And that's really what our goal is. We want to find those times when random nature is the most minimized, and that's where an opportunity will be. Those are infrequent times. The other thing is price is a discounting mechanism. That's where we have to learn to trust the chart and trust price, because there's a lot of information out in the world that we don't know, we don't have access to, right? And that's what smart money is all about, right? They have better resources, they can pay for better information, so they don't have to guess as much, and they're going to act on that information, and they leave footprints, right, when they act on that information. So instead of me sitting here trying to outsmart the market, or trying to think that I'm in control, and trying to think that I can look at information that the mainstream news gives me and I can put those puzzle pieces together because I'm a fairly intelligent person. I don't pretend like that, okay? I know that I don't know anything that's going on, and all I can do is trust the price, because whoever does know what is really going on, they're going to act on information, and I'm looking for their footprints. That's it. That's all I'm looking for. So that's why when people start giving me all these, like, this fundamental stuff and this logic and all that, whatever, it's like, yeah, okay, whatever. Because you know what? You might be right, you might not be right. No one knows really what's going to happen. Okay, you have these experts that predict all these ridiculous things. Oh, Bitcoin is going to be here in 6 months, and the stock market's going to be here. Right, assuming nothing changes from today onto that time. And but that event right there, that wasn't expected. Of course it wasn't. So that's what you have to keep in mind. I don't know if I'm making sense right now, but anyway, good question. All right, let me see what time it is. All right, I got to wrap this up here. I'm going to answer one more question. I do appreciate everyone's questions, and thank you for your participation, and I'm sorry if I missed your question. Please just join me for another stream, okay? I stream on TradingView and on here on Mondays, so that'll be my next one. Let's take a look at Theta, because HS asks for Theta, all right? So I've been liking Theta in general. I mean, I like what they're about generally. But now here's the thing, all right? Who cares about fundamentals, right? I mean, it doesn't matter. This thing has been range bound for a little while, and it's pulling back into this range, looks like a range low after this broad bullish move. So here we are, similar to Bitcoin. HS, this is an attractive location. It is attractive, just like the other coins we looked at. It's sitting at the support. Current price action is not favorable, right? We took out the previous low here at that 1090 area, previous candle low, and now we're fooling around in this range low area, similar to Bitcoin. So what I want to see here for a swing trade long, is I want to see a green candle develop. In fact, I picked Litecoin for similar reasons, right? Litecoin's not looking so hot right now. It doesn't have the range that this thing has. But I picked Litecoin for similar reasons, and that is because of fooling around near a range support. Now, I would wait for that. If this thing breaks the support, right? If Bitcoin breaks, this thing breaks, then I would stay away from it, okay? If you bought this on that previous bullish candle, which wouldn't have been a bad idea, right? If it looked like this, that's not a bad idea. This is where you need to make adjustments, right? Either reduce risk, get out, take the small loss, right? Doesn't mean you have to blow the whole position. Maybe you want to get out of half of it for the loss, and then you get back in if the market turns your way again. It's a way of controlling risk. But generally, I like the location. It needs to reverse. Right now, there's nothing here that says it's a long at the moment except attractive location, okay? And broader trend is on your side. I'm very suspicious of these things. We just looked at a dozen coins that are all sitting at supports while Bitcoin is trying to break, okay? I mean, look at Bitcoin right now. Looks just like it. So Bitcoin starts pushing that 50K, and you start, if you see like 48K trade and it's decisive and the candle is large and we're closing at that, that's a break. And, I would not go into hope mode. That's where really it would be a good idea to make adjustments, okay? At that point, whether it's taking a small loss, reducing your position, reducing your exposure. I'm not here to scare people or to get you to overreact. I just want you to know that, that's where, unless you're willing to take the broader risk, meaning, okay, if Bitcoin pulls back to 40K, whatever, I can handle it. Okay, but just realize that's the risk you're facing, okay? It can also break that. So there's no way to know. It's up to the market to basically, prove what it's going to do by a lot of times telling us what it's not doing. Like right now, there are no buyers here right now, but it hasn't taken out the support level yet. So I can't judge this and say that it's a short or that it's bearish because we're at a support level. And I know that there's a probability that we turn green here, even though there's nothing at the moment that shows that, okay? So I'm anticipating, I'm thinking ahead. And that's what you need to be able to do. A lot of these gurus, they see what's in front of them and they react to that, okay? I'm going to say that word again, react, with all those syllables in it. Reacting is not a good thing, all right? You need to be able to be ahead of the market and anticipate, not react to what you see, because the market, is, like I said before, you can't actually see what's going on behind those candles, all right? So you're reacting to like derivative and random information a lot of times. So don't react, anticipate. All right, cool. So everyone, I'm going to wrap this up before I overdo it and I talk way too much. Thank you all for your great questions. I'm sorry I missed some of these questions here. Ethereum outperforming Bitcoin. Well, for now, Shubham, for the moment it is. Okay, I'm just trying to scan through the chat real quick. Okay, thanks. Then lock in a double candle. After your explanation, I saw I should have done this instead. Okay, that's why I became. Oh, well, Ruben, I appreciate that. Okay, cool. Oh, okay, Ruben. Oh, okay, cool. I saw an email from you. I'm sorry. I just, things are. I'm going to respond to your email. Things are just very, hectic, and it's hard for me to do all these things at the same time. So I apologize for that. For people that send emails, if I don't respond right away, I apologize, but I will get to it. Okay. But anyway, thank you for your support, and thank you for joining us. And also, I ask that people please be patient with our calls. Things have been slow over recent few weeks, and the environment has not been very favorable. And we have a very conservative philosophy. So we're not going to sit there and force trades. I don't want people to get overexposed. So I'd rather not make calls and have people protect them, be protected, at least from our side, right? If they follow some other guru that's telling them to do stuff and they lose money, hey, that's not my fault. But the thing is, I'm not going to make all kinds of calls when I see all this risk in the market. I'd rather make no calls and just, enforce patience, okay? So if you just joined us and you're like, man, these guys don't make any calls, I just ask to please be patient and just let this market play out. and there will be opportunities. Okay, again, we're always looking for them, but you have to understand, part of my responsibility is to look out for our members, and if I think the risk is generally too high, even if I see a setup, you know, sometimes they'll say, hey, this is an aggressive one, blah, 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 we're not taking it. We'll be clear about that. But sometimes it's just not even worth giving it a try. It's not even worth it, right? And that's I always have to keep that in mind, because it's not just what we think. It's, you know, what we say and do affects other people, and we have to be very responsible with that, and we are. Okay, so again, thank you for that. All right, so XCM, no, I'm sorry. I'm going to wrap this up here. I'm just trying to get through these questions here. AVAX. No, I'll cover those next time. Romana, can you show 39K support on BTC? Should 200? All right, so Romana, real quick, as far as the 200 MA, the 200 moving average, you know, it can act as a support, and a lot of people will be watching something like that, but don't put a lot of weight into it. The thing is, if you want to use that to anticipate, okay, the key is waiting for the price action around that level, because that's it. It can cut right through that support like it's not even there, because it's just a line on the chart, right? It's the price action that develops around there is when you can make the judgment. So it's a good area to keep an eye on, but that's 39K. I said 40K earlier. I don't even have the 200 EMA on my chart, and I know 40K is a level, okay? So anyway, so thanks for bringing that one up. Okay, so yeah, so Vanda, I usually stream on Mondays on here and on TradingView, and usually on Thursdays on here. So you can find me, and we do our Talking Market show on Tuesdays. So, you know, we're on a couple of times a week, so you could check, you can look for me on there, or come to our free chat room over at Greenbridge. You can also ask your questions in there, and we may not be able to get to them like in real time, but we will get to them. So that's a good place to ask questions for also. Okay. Well, Bitcoin is not really, this is really nothing yet, Andres or whatever. This is nothing yet. This is just, you know, regular price action. I wouldn't be dramatic about it, because it's not really doing anything. We haven't broken 50K yet, right? We're at 52.3, so not a big deal. All right, cool. So, all right, everyone, again, I apologize again if I missed your question. I got to wrap this up. Man, I talk too much. Even when I'm trying to wrap things up, I talk too much. So thank you all very, very much for your participation and your great questions, and for spending some time with me here today. Again, join me next time. Check out Greenbridge Investing. All the links are in the section below, so you can check that out if you're more interested in what we do. And again, enjoy the rest of your day, the rest of your evening, or wherever you are in the world. I know we have people from all over the globe. Again, thank you all, and I will see you on the next stream. Thank you so much for watching.